The views and opinions expressed on the following program are not necessarily those of the staff and management of Salem Media of Hawaii.
Welcome to Hawaii Money Resource with financial advisor Marko Mijuskovic.
Marko Mijuskovic is registered representative and financial advisor of Park Avenue Securities LLC, 7 Hanover Square, New York, 10004, and at Wealth Strategy Partners, 677 Ala Moana Boulevard, Suite 720, Honolulu, Hawaii, 96813. This show is for informational purposes only. Individual risk tolerance and investment objectives must be reviewed prior to making any specific recommendations.
And now your host, Marko Mijuskovic.
Welcome back. You're listening to Hawaii Money Resource. My name is Marko Mijuskovic, Senior Partner at Wealth Strategy Partners, also Certified Exit Planner. And you are listening to Hawaii Money Resource exclusively on Wednesday night, 5 p.m. to 6 p.m., KGU 760 a.m. if you are dialing in your car or maybe on old-fashioned radio. If not, if you're next to the computer, you can definitely stream live at hawaiimoneyresource.com. hawaiimoneyresource.com is the website where you can go and learn a little bit more about the radio show. We've been around the block for quite a few years, since 2011, and interview over 300, almost 400 business owners, Hawaii business owners. There was a few from the mainland as well. And we did pick their brain for like quite a few hours running that show, and we learn a lot. And that's the whole primary reason of Hawaii Money Resource. We try to equip you with experience of someone else, and hopefully if you are in the business or you are trying to start a business, you can have more idea of what you can do and what you cannot do. Hawaii Money Resource online, hawaiimoneyresource.com, hawaiimoneyresource.com. So in case you missed the show, in case that you were busy doing something else, you can always go online and download the podcast, and you can listen that on your own convenience. In some cases, we do not have a guest. Like today, we have the business exit planning edition of Hawaii Money Resource. So we're going to be talking about the business, how to run that business, increase the value of that business, and so one day you can exit that business in style. And that's pretty much what we do in our office. So when the business owner gives us a call and says, Marko, I need your help because I am not really sure how I'm going to get out of the business, that's where we come handy. We give you a lot of good information. We talk to you. We interview you and your people that you're trying to transfer business to. And when I say your people, usually businesses in Hawaii are internal transfers, transfer to the key employees or management or maybe everybody in the company. So we interview everybody. We figure out what's going on, who will be the right candidate, why they're right candidate. And then what's most important thing is we figure out how the money is going to flow from the business to you and your pocket as the business owner. And that's pretty much where we are specializing, internal transfers. And of course, we do help business owners figure out who will buy their business if they want to be sold to the third party. So that all is available in our office, working with us directly with me and my team. Quite a few business owners work with us so far. And today we're going to have a designated topic. So when you listen to our radio show, you can pretty much learn about one topic in particular, and that is the value drivers. Value drivers of the business, why the value drivers are important, why people should focus on the value drivers, especially if the value of their business is not where it's supposed to be. Before I go and start with today's topic and talk about the value drivers, I'm going to refer you to our website that is strictly focusing on a business exit. It's called businessexitplanninghawaii.com, businessexitplanninghawaii.com. That's your resource if you want to learn a little bit more about a business exit planning, but not only about a business exit planning. You need to learn about everything that you will be facing as a business owner when it comes to running that business and eventually departing that business. So estate planning as well, how you're going to protect this business and take it to the next generation or generations. You can learn a little bit more about business valuation. You can even, on our website, you can get some preliminary numbers of the value of your business because we have a business valuation calculator or more likely like a software that is a built-in that we are using for a business valuation, preliminary business valuation of the businesses. You can also start that on our website. And of course, you can learn a little bit more about asset protection. For some reason, asset protection is very important in nowadays environment. Talking to the business owner, a lot of time business owners are concerned with the asset protection because they're not really aware how they can protect themselves, but other just buying the insurance policies. What else that they can do as a business owner to protect their assets, their personal assets, business assets, etc., etc. So businessexitplanninghawaii.com is the website that provides a lot of resources, especially under the resource section. We have articles, press releases, white papers. You can listen to the podcast. There is some videos as well, workshops, newsletters, and much, much, much more. So one more time, businessexitplanninghawaii.com, businessexitplanninghawaii.com. And don't forget, if you cannot find what you're looking for and you're still having a questions, you can always give us a call directly, 808-695-2102, 695-2102. It's a number that you can call us directly in our office and learn about our services and what is it and how we can help you. So just to give you a quick update, just as of recently, we did one of the major events for this year. We had like a room full of business owners. We had a board panel. We have a business exit planning advisory board as a panel. We had like CPA, business valuator, business attorney, and myself, and we were covering a couple of case scenarios, trying to relate what's currently going on, what's currently we're working on with the audience and the business owners that came to visit our seminar. And to be, it was a very interesting seminar. Why? Because a lot of questions when it comes to, just running the business, not just like how we're going to leave this business, but how are we going to improve the value? How can we get that value of the business up? How can we structure certain deals so in case that we are transferring the business to third party or internally, we motivate the people in the business to stay with the business for duration of transition. So a lot of good questions, and we answer them all. I think pretty soon we're going to have a video, at least portions of the seminar up and running on our website. So please make sure you bookmark the businessexitplanninghawaii.com. Okay, so the topic for today is value drivers and business sale price. Why is that important? And like you already heard about it, me mentioning that a lot of times in the past, but business experts may mention the value drivers as if everyone knows what they are, how they work, and where their impact will be the greatest. So I'm not sure if you really understand that. So that's why we're going to kind of like go into the details when it comes to what are the business value drivers. It can be also difficult and frustrating to know that building business value is a frequent topic of discussion, but actually building value is sometimes easier said than done. And you all know that as a business owner. You probably say, yeah, that's true. We can talk about till tomorrow about how we're going to do it. It may be the case that one business has buyers line up willing to pay the top dollar while another sits on the market for months or even years. What do buyers look for in prospective business acquisition, etc., etc.? And those are all the questions that we're going to answer. There are many opinions about which attributes or characteristics buyers seek, but here's what we observe. The characteristics buyer seeks must exist before the sale process even begins, and it is your job as a business owner to create the value within your business prior to sale. We call characteristics that impact the value drivers. So let's look at the business through the buyer's eyes. To grasp the importance of the value drivers when preparing to sell a business, owner must put themselves in the buyer's shoes. Consider the following case study, which illustrates how the buyer might approach the search for effective value drivers. So we're going to use the imaginary company for this case scenario just to kind of paint the picture and so you can understand a little bit better what the value drivers are. So the Alpha company has earnings before interest, taxes, depreciation, and amortization, popularly known EBITDA, of $2 million, an owner who runs the business and systems and processes that create the growth. The alpha company does not have a true management team in place, and the owner generates a majority of its sales. The owner is the locus of the company, holding both the CEO and CFO position. So if you're listening to a radio show, you're probably kind of like seeing, yep, that's me. I'm doing CEO, CFO, and cooking the coffee, cleaning, and everything else within that business. So with such overwhelming responsibilities, the owner is burning out quickly. I guess people are getting older, and you're running out of energy to do all these important things. So by comparison, there is a beta company, so company B, that has EBITDA same, $2 million, and solid management team that runs the business, systems, and processes. The management team creates efficiencies within the business, and the owner vacations for 6 weeks a year. Sounds really good to me. So if you were a buyer comparing these two companies, which factors would you consider more likely to lead to the successful acquisition? How much more would you pay for business with a strong management team, one of the most important value drivers, by the way, and would you be interested in buying a business whose management team and the owner walks out when you walk in? Experts in getting business sold understand that companies that lack strong value drivers also lack a strong pool of buyers. The buyers that do come to the table do not arrive with pockets full of cash, and usually is a bit of a struggle how they're going to pay for that business, especially if that business does not have all the value drivers aligned. So I'm going to talk about most common value drivers before we take our first break. So the first one, consider the following, is a stable and motivating management team. That's a value driver number one. If owner can wait a year to sell their business, they should consider an incentive compensation system that is either cash or stock-based and rewards key employees based on how the company performs, usually measured by increases in pre-tax income. Sophisticated buyers know that with a solid management team in place, prospects are good for continued business success. Without a strong management team, it may be difficult to sell the business to a third party or transfer it to an insider. Second, operating systems that improve cash flow sustainability. Operating systems include the computerized and manual procedures used in a business to generate its revenue and control expenses, as well as a method used to track how customers are identified and how products and services are delivered. The establishment and documentation of standard business procedures and systems demonstrate to a buyer that the business can be maintained profitably after the sale. And I understand this is a lot of time. I'm telling you what you need to do, but how you're going to do it, where you're going to find the time, and how you're going to extract yourself from the day-to-day operation and finally sit down and start strategically think about your business and how to grow your business. We're going to continue more. Let's take our quick first break. The topic for today is value drivers and business sale price. We are right now covering all the important business value drivers. We're going to take a quick break. You're listening to Hawaii Money Resource, and my name is Marko Mijuskovic. Stay tuned, and we'll be right back.
760 KGU.
Part of the Wall Street Business Network.
Tests, written letters, even consider chaining yourself to a tree. But saving the world is not easy at all. Fortunately, saving a life is. And when you donate 1 pint of blood, you can save up to 3 lives. Visit bloodsaves.com to learn more.
Everything you've achieved in life has been all you, right? Your work, your saving, your time, your planning. So there's no reason protecting your identity shouldn't be all you too, right? Wrong. It'd be hard to know where to start, how to find the time, and frankly, how to do it. Which is why there's LifeLock. We use technology to alert you to a wide range of threats to your identity beyond what you can see by simply monitoring your credit. And if you have a problem, one of our US-based specialists will work to fix it. No one can prevent all identity theft or monitor all transactions at all businesses. But with LifeLock, you spare yourself the time, runaround, and frustration of doing it on your own. Join starting at $9.99 a month plus applicable taxes. Now you can get 10% off. Go to lifelock.com or call 1-800-LifeLock and use promo code NEWS. LifeLock.
Once upon a time, there was a business owner who worked hard and watched his company flourish. Then came the time to sell his company and retire in Palm Beach. But the path to his happily ever after was full of pitfalls and monstrous taxes. Whatever was he to do?
It's not a fairy tale, and the wrong strategy can deprive you of a storybook ending. I'm Marko Mijuskovic, and I know about business valuation. I'm also a specialist in business exit, asset protection, and estate planning. Visit my website, businessexitplanninghawaii.com, and I promise you'll find more than just a trail of breadcrumbs.
BusinessExitPlanningHawaii.com is an online resource designed to help you prepare for the final stage of your business's life cycle. At BusinessExitPlanningHawaii.com, you'll have no trouble at all finding workshops, podcasts, videos, articles, and more. Your happily ever after is just a click away at BusinessExitPlanningHawaii.com.
You're listening to Marko Mijuskovic on AM 760. More than 4,000 other listeners tune in daily to hear Marko talk about investment strategies and his new area of expertise, business exit planning. If you're ready to take it to the next level, Mr. Mijuskovic invites you to attend one of his complimentary seminars. Each month, he offers a seminar for business owners interested in business exit planning. For everybody else, he offers a second seminar on investment strategies. Either way, you'll get such a wealth of information that I'm going to attend one right now. For information on how you can attend, visit HawaiiMoneyResource.com. The lawyers can take it from here.
Registered representative and financial advisor of Park Avenue Securities, LLC, PAS, OSJ 7 Hanover Square, New York, 10004, 1-888-600-4667. Securities products and advisory services offered through PAS member FINRA SIPC. Financial representative of the Guardian Life Insurance Company of America. Guardian, New York, New York. PAS is an indirect wholly owned subsidiary of Guardian. Wealth Strategy Partners, LLC is not an affiliate or subsidiary of PAS or Guardian. 2014-16224, expiration 1/2017.
You're listening to Hawaii Money Resource with financial advisor Marko Mijuskovic. If you'd like to speak to Marko, either on the air or after the show, call toll-free from Oahu and the outer islands, 877-695-2102. That's 877-695-2102.
Welcome back. You're listening to Hawaii Money Resource. My name is Marko Mijuskovic, Senior Partner at Wealth Strategy Partners, also Certified Exit Planner. And like a commercials earlier said, we are having expertise when it comes to the business exit planning. A lot of time people are wondering, like, what is it that we are going to do? I mean, don't I need an attorney? Don't I need a CPA? I mean, can my CPA do this business exit planning? And I always said, of course, the CPA can do it for you, but is it really something that your CPA is doing on a daily basis, or is just when someone like yourself asks them, let's see how we can figure out this transfer? So what we actually do for our clients is we sit down with them and we figure out what is it that they want to do? What is the goals? Second, we need to figure out when they want to get out. What is the time frame? Then we need to figure out what is the financial gap between their personal finances accumulated over a number of years and business value. That gives you a hint that actually a lot of people don't even have a clue, because if it's like judging what I know, I would say 97.8% of the business owners do not actually know the real true value of the business. Neither did they took some time to figure out that and do the formal or informal appraisal of the business, unfortunately. Then once we figure out what is the financial gap between the personal finances and the value of the business, then we need to figure out how we can grow that business. Where if the value is not where you want it to be and you want it to be on a different level just because that's what you need in order to comfortably retire out of the business, we need to see how we're going to grow that business and get it to the next level. Once we figure that out, we need to start looking who's going to get that business. Is it going to be a little Joe that works in a packaging department, or is it going to be a third party buyer, some friendly competitor, or someone from not even maybe from Hawaii, maybe from somewhere else, but they're just trying to get in there, get their foot on the ground here in Hawaii? You don't know, but we need to figure that out in the process of exit planning. Once we figure it out, or maybe we are in a process of figuring that out, we need to figure out, okay, what if something happened and me or you as a business owner, you don't see that light on the end of the tunnel. Why? Because maybe something happened. So we need to figure out what is the contingency or continuity plan. And on the end, once we figure out all these little scoops when it comes to the business exit planning, and we find a buyer, or we maybe successfully schedule the transfer to internally to the key employees or one partner or whatever, we need to figure out how can we get that and pass that through your estate to your next generation or maybe other generations to come. So a lot of planning, a lot of thinking, a lot of time business owners don't even know where to start. So that's why they need us. We serve in a position of the quarterback. We do serve in a position of figuring out who will be your next person in line to take over that business. We serve in position that we can figure out how the money is going to flow from the business to the business owners on the most tax efficient way. And on the end of the day, how we're going to pass that, all that money you're going to get out of sales to the next generation on very, very effective way. So a lot of thinking, a lot of planning, and we do need the CPAs, by the way. We do need attorneys to help us in this process. Why? Because there is a lot of tax planning. There is a lot of legal documents that need to be in place. There is a lot of stuff that you need to take care of in the process of estate planning, exit planning, etc., etc. I say a lot of times, like, you're working hard as a business owner to build the value of this business and create something. Now you need to work actually even harder to preserve it and successfully transfer it. But do not get discouraged, by the way. Do not get discouraged, because it's possible. People are doing all the time. You just need to start somewhere. Anyway, business exit planning edition of Hawaii Money Resources. Today we're talking about the value drivers and the business sale price. Why is that important? Well, it's very important, because if the value drivers are not in place, the value of the business is not on the highest level. So before the break, we just start talking about important value drivers that business should be aware of. We talk about a stable and motivated management team. We talk about operating systems that can improve cash flow and sustainability. And now we're talking about solid, diversified customer base. This one is a sneaky one. Why? Because a lot of time business owners actually know in the back of their head that something is wrong there, but they usually do not address this issue. And that issue can be that one customer, one supplier, or whatever, is taking more than 10% of the overall annual revenue. We just had recently, as of a few months ago, we were talking to the distribution business that was looking to exit in some point in the future. We were talking about a preparation, and in one of the meetings, I asked them, okay, so let's talk about your supplier base. What is the percentage of supplier XYZ? They took a pause for a moment and they said 50%, 50. I said immediately, you need to start working on lowering these percentages down, and I would say it's probably good thing what happened next. Week from our meeting, when we identified that this is actually the huge red flag and huge problem that they need to deal with it, that supplier that was more than 50% actually pulled the contracts out and left the client pretty much with half of the revenue left because of that move. So if you are having customers or suppliers that are taking more than 10%, I'm not talking 50%, I'm talking 10%, you need to address this issue as soon as possible. Why? Because your client base or supplier base need to be diversified. And buyers typically look for customer base in which no single client accounts for more than 10% of the total assets or total sales. Diversified customer base helps insulate a company from the loss of any single customer. If the majority of any owner's customer base is made up of only one or two good customers, the owner should consider reinvesting profits into additional capacity that will make developing a broader customer base possible. I'm telling you, don't take these value drivers so easily. It's a main issue. First, you will never find a buyer that will give you the price you want for your business if you have a few customers in your customer base, or you're risking your annual sales to be crippled if that customer pulled out. Next value driver is realistic growth strategy. Buyers tend to pay premium prices for companies with realistic strategies for growth. Even if an owner expects to retire tomorrow, it makes sense to have a written plan describing future growth and how the growth will be achieved based on the industry dynamics. Increased demand for company products, new product lines, market plans, growth through acquisition, and expansion through probably acquiring new territory, product lines, and manufacturing capacity. This properly communicated detailed growth plan helps attract buyers. So more business or more time you as a business owner actually spend on working on business will help the transition and sale of your business. In the same time, will increase the value and sale price of your business, and in the same time will make your business more attractive to the buyer. Next value driver is effective financial controls. Financial controls are not only a critical element of any business, but also business management, but also safeguards for company assets. Effective financial controls support the claim that the company is consistently profitable. The best way for owners to document that their company have effective financial controls and that their historical financial statements are correct is through a certified audit or verified financial statement from established CPA firm. Stable and improving cash flow, that's another value driver. Ultimately, all value drivers contribute to a stable and predictable cash flow. It is important that the company's cash flow remains sustainable and continue to grow, especially in a year or so preceding the sale of the business. Owners can begin increasing cash flow today by focusing on ways to operate their business more efficiently by increasing productivity and decreasing the cost. You can install these value drivers and better position your company to secure premium price upon your exit with the help of our office and our team that is specializing in working on business exit and business exit planning. So just in a summary, I hope this was helpful, at least give you some ideas of what is the business value drivers and what should you focus on. Why? Because it's important. Business value drivers and value drivers internally in your companies are directly related to the sale price that you're going to get sometimes in the future. Now I want to redirect you, if you want to learn a little bit more about value drivers or anything that will impact the value of your business, I'm encouraging you, first, give us a call. 695-2102, 695-2102. I also want to mention the story that I said earlier when it came to the client that 50% of his supplier base was one company and they pulled out and he pretty much got affected sales price because he just lost the main account. What happened? Well, I told him, we talk about it, we spent like probably few meetings talking about it, what happened and assessing the situation and what should be the next move. I told him you can throw the towel and you can quit, but you can also look at this situation as pretty much a blessing. Why? Yes, you put yourself in a situation that you lost half of the potential revenue, what actually turned around not to be the truth. It was actually way less, because servicing that supplier was coming with the additional cost, unnecessary cost of shipping and storaging and so on and so forth, that turns out in reality to be only around 25% loss. Then second, you want to find out that something like this might happen to you today versus like at the moment when you were ready to transfer the business. So on the end of the days after the brainstorming, a series of brainstorm, they decided to continue the business, and they are doing very well because now they can pretty much eliminate all the restrictions that they have from before from that supplier. Now they can do pretty much whatever they want. They can grow the business however they want, and they can put all these new processes and procedures in place that will eventually help them sell that business for a premium price sometimes in the future. So for your information, if you need more info on a business exit planning, check our website, businessexitplanninghawaii.com. Businessexitplanninghawaii.com. Under the section resources, check our articles, check our press releases. For most important, check our white papers, because we have a lot of white papers that are written for different topics that you can utilize any day, any time, and get some ideas around it. And once you click on the white papers, guess what comes up first? Value drivers. So don't be lazy. Spend some time reading all this stuff. We have like 3 pages of different resources when it comes to the business exit planning. And you can read it, you can inquire with me, you can send us an email, you can give us a call, and we'll be more than happy to address the issues that you are facing as a business owner. We have more to come. You're listening to Business Exit Planning, additional Hawaii Money Resource. We're going to take our second break. Once we come back, we're going to continue about the value drivers and business sale price. So stay tuned, and we'll be right back.
.760 KGU.
Part of the Wall Street Business Network.
Ton hunk of steel. And a text takes your eyes off the road for an average of 5 seconds. At 55 miles per hour, that's long enough to travel the length of a football field and cause some serious damage. Turn it off. Trust me, whatever it is, you'll live.
Learn more at StopTextStopWrecks.org. Brought to you by the Ad Council and the National Highway Traffic Safety Administration.
Okay, do we have everything ready for the trip?
Let's go through the list.
Laptop.
Check.
Tablet.
Check.
Smartphones.
Check and double check.
iDrive.
Check. Wait, what?
iDrive. We're flying cross-country with half a dozen devices. We're going to need our data backed up.
Oh, like our tax records, home movies, wedding pictures?
Exactly. And because it securely backs up all of our devices to one location in the cloud, no matter what happens to our gadgets, we're protected.
Is it safe?
It has military-grade encryption, so only we can access our files.
iDrive sounds great. So that means it must cost a fortune.
That's the best part. For less than $5 a month, I'm protecting our desktop, laptop, tablet, and smartphones. Plus, I signed up at iDrive.com with the promo code PROTECT, so I saved us 20% on the first year.
So does that mean we can upgrade to first class?
Nice try.
How would you like to work in the world of finance? Wealth Strategy Partners is considering smart, motivated financial associates. You will have the potential to earn competitive earnings while providing a necessary service to the community. Furthermore, when you join Wealth Strategy Partners, you will be eligible to receive a full benefits package, including insurance, a pension plan, and more. If you enjoy working with people and have an interest in making a difference in people's lives, contact Wealth Strategy Partners, 695-2102. That's 695-2102. Make the call that could change your life. 695-2102. Join Wealth Strategy Partners, 695-2102. Registered representative and financial advisor of Park Avenue Securities, LLC, abbreviated PAS, 7 Hanover Square, New York, 10004. Securities, products, or services and advisory services are offered through PAS, a registered broker-dealer and investment advisor, 888-600-4667. PAS is a member of FINRA SIPC.
You're listening to Hawaii Money Resource with financial advisor Marko Mijuskovic. If you'd like to speak to Marko, either on the air or after the show, call toll-free from Oahu and the outer islands, 877-695-2102. That's 877-695-2102.
Welcome back. You're listening to Hawaii Money Resource. My name is Marko Mijuskovic, Senior Partner at Wealth Strategy Partners, also Certified Exit Planner. And you're listening to Hawaii Money Resource every week, Wednesday night, 5 p.m. to 6 p.m., right about time when you're stuck in traffic. You can tune in at AM 760 and listen to our program. A lot of guest business owners went through our show in last 5 years or so. We interviewed tremendous amount of different business owners. We picked their brain. We tried to kind of relive and help you, educate you through someone else's experience. There was a lot of good ideas. There was a lot of good ideas that business owners shared with you. And maybe a few years, 2-3 years ago, we started with the business exit planning concept. So when we do not have a business owner, we talk about business exit planning, how you can run their business, grow it, prepare it, so one day you can get out of their business in style. What does that mean, getting out of the business in style? That means that getting the maximum value for your business and paying the minimum taxes. Well, a lot of time, unfortunately, business owners in preparation for this event, they are not really grasping the concept how much tax is going to affect their sale price and how much they're going to actually receive from the sale of the business after they pay taxes on the sale of the business. Usually capital gain tax, federal, state, can be up there, over 30%. So just think about it. If you get $1, third of that is going to go to IRS, so you're keeping the 2/3. Now, the sale price that you're thinking of selling your business might not be that lucrative and that high and that actually on the right level that you needed to support your lifestyle after that business is sold. So that's why it's important. Make sure that you're working with the proper, right business exit planner like our office, because that's all we do, in and out. This is not something that we're doing a part-time or if someone is asking us to help them out. This is what we do full-time. There is a process, there is a system in place, there is a tools. All that is available to the certain extent to you if you go to businessexitplanninghawaii.com. Click on resources, click educate yourself on our services. You will see right there from the beginning that this is something different, something that you should think about it. So we're talking about the business, we're talking about value drivers and business sale price today. That's a topic for today's show. So we are focusing still on the value drivers. Is this something that is in a business owner head, and the business owner truly strategically focusing on increasing the value drivers? I will say from my experience working with the business owners for almost 12 years that this is something they're doing kind of like, on the fly, not really focusing 100%. There is only small percentage of the businesses and business owners that will say, okay, let's identify the value drivers and let's focus on building it. So I'm going to give you another case sample scenario. Don and Preston Slater, owners of machine shop with a $7 million annual revenue, sat down and announced, we have decided to leave the business as soon as possible. We got our management team in place and want to execute a transfer of the entire business in next 6 to 24 months. It has been a great run, but we are burned out. What do we do next? So if you're listening to this, you're probably saying, well, I would like to do that too. Sounds like a really good idea. To answer the question, I asked a few of my own. Burned out? ? What was the last time the two of you left the business for at least 2 weeks, or better yet, a month? And as expected, Don told me that they had never left the company for more than 2 weeks, and that was over 10 years ago. Just thinking about these numbers and these years, I am getting burned out. The reason for their burnout was crystal clear, but how valid was their belief that they installed a management team? If they truly had one in place, why did they feel compelled to go to work every day? Again, Don explained. When we left, things didn't go smoothly. Preston is the only one who knows how to maintain the machinery. When one of the machines went on the blink, he spent hours on the phone walking the plant manager through the repair process. So imagine you on vacation and you need to call in and spend hours talking to your sales manager or your supervisor somewhere in your establishment, walking them through the process how to do something or fix something. As Dawn talked, she revealed that Preston was also the only one who knew how to set up the program, that company manufacturing process, to efficiently produce the customer orders. In addition, he was the only one who knew how to design the products their customers demand. In short, there was a treasure trove of knowledge firmly locked between Preston's 2 ears, pretty much in his head. So I hope you already see the problem. There was no systems in place. Preston and Dawn did indeed have a key employees in charge of marketing and sales, personnel, and the plan, but they did not have a management team. There were 3 very important functions: product design, setup and programming of manufacturing equipment, and equipment maintenance that only Preston could perform. Without converting these functions to systems, however, Preston and Dawn did not have a key value driver in place, one that would make their company more valuable to buyer and more readily sellable. There is a necessity of having trained and motivated management team in place before and after you leave the company. In the eyes of the buyer, a business has a little value if its owner departure means the new owner must reinvent the wheel. So it is with the systems. Once you are gone, can the new owners rely on the systems to make your success repeatable and sustainable? If not, the new owners simply may not be able to sustain the cash flow necessary to pay you off. Think about it. If you're selling your most valuable assets, you need to understand and ask yourself, is this most valuable asset sustainable after my departure? If the answer is no, you have a problem, but we do have a solution, so you can call us. I sound like an infomercial right now, 695-2102. So what is a system? A business system is a repeatable process the employees understand and use to achieve a desired purpose. Owners implement human resource, marketing, organizational, administrative, financial, accounting, lead generation, and sales system. As you can see, it's not one system, it's more like 7. So there is the book written by Michael Gerber. The name of the book is The E-Myth Revisited, Why Most Small Businesses Do Not Work and What to Do About It. He suggests that there are 9 elements of a successful system. Theoretically, that may be true, but for our purpose, we can limit our discussion to 4 prime characteristics of the system. Number 1, hope we don't run out of time. The number 1, the system must have a clear purpose. What is desired result of the system? In Preston's case, he needed 3 systems: new product design, machine setup, and machine maintenance. Number 2, the system must be accountable. Who is responsible for executing each step of the system at a determined time in order for system to accomplish its goal? How will you objectively measure the success of the system? Preston, the guy from our case study earlier, needed to designate the positions in the company that would be responsible for executing the 3 new systems, as well as how he would measure how successful each system was implemented. The system must be documented. If the system is not written down, it may or may not exist in the mind of employees and could be an endless variety of interpretations. You know what I mean, right? We can do certain things different way just because we interpret it differently. If a system isn't described in writing, employees can't be expected to follow it, and potential buyer doesn't know that is truly existing. While Peterson was tempted to conduct a quick one-time training session and consider his job done, he needed to create manuals that describe in detail what decision went into his designs, how he set up the equipment to facilitate those designs, and how to maintain the equipment on a regular and on as needed basis. The system must be repeatable. That's a number 4. If your system only work if you are there to execute them, they do not meet the standard of repeatability. If you feel if you can delegate your role in a particular system, that system is not repeatable. Your system may be dependent on a particular position, but they must be dependent of any particular person to be easily repeatable. Again, Preston had to do more than simply train one employee to do his job. He had to figure out a way to make his tasks that only he had performed in the past easily repeatable by others in the future. In doing so, he could replace himself with a system that others could use to replicate his expertise. And what I think, my personal opinion, he could spend a month off on vacation without worrying that he need to spend hours on the phone with someone just because the machine went down. So let me repeat quickly the 4 most important components of having a system. Number 1, clear purpose. Number 2, accountable. Number 3, documented. Number 4, repeatable. So creating a system, how does the business owner create a system? There are a number of books, including the books referred to you earlier, and experienced business consultant that can help you design successful system. As you read more about this, however, remember, you can always give us a call and we can help you with creation of the system. 695-2102, 695-2102. We're going to take our last break for today. Once we come back from the break, we're going to wrap up today's show. Today's topic is value drivers and business sale price. Stay tuned. My name is Marko Mijuskovic. You're listening to Hawaii Money Resource. I'll be right back.
760 KGU.
Part of the Wall Street Business Network.
Diary entry, August 15th. My joints ache. Today I can hardly move. I need some answers.
September 3rd. I'm tired all the time. What's going on?
June 8th. I woke up with a rash on my face. I want to know why.
For answers, ask your doctor the right question. Could I have lupus? For answers, for support, for hope, visit couldihavelupus.gov or call 1-800-994-9662. Brought to you by the U.S. Department of Health and Human Services Office on Women's Health and the Ad Council.
We all want to retire someday, but how will you afford it? Marko Mijuskovic here, financial advisor for Wealth Strategy Partners. Times are tough, but nothing brings comfort and security like having a financial strategy. Some financial strategies can be complicated. All those numbers and percentage points. It makes your head spin. But that's why I created an easier to understand system called Retirement Income Timeline. Let me analyze your situation using my Retirement Income Timeline, and I'll show you how you may be able to turn your money worries of today into a stress-free retirement of tomorrow. It's easy. Just call me and I'll assist you. Get your personal retirement income timeline by me, Marko Mijuskovic, today. Call 695-2102, 695-2102.
Registered representative and financial advisor of Park Avenue Securities, LLC, abbreviated PAS, 7 Hanover Square, New York, New York, 10004. Securities products or services and advisory services are offered through PAS, a registered broker-dealer and investment advisor. 888-600-4667. PAS is a member FINRA SIPC.
Achieving personal financial success can be complicated. Marko Mijuskovic can make it simpler. That's something very good to know in a world where the wrong financial decisions can be all too costly. Marko Mijuskovic, Vice President of Wealth Strategy Partners, has been helping people in Hawaii successfully organize and plan their finances for years. Marko uses an holistic approach to help you balance your current financial obligations as well as your future concerns. And he does this while keeping things simple. Organizing your finances is serious business, but it doesn't have to be complicated. Find out how Marko can help you make smart, informed decisions about your financial future. Call him and schedule your complimentary session and tell him your story. He's there to listen. The toll-free number to call is 877-695-2102. That's 877-695-2102. 877-695-2102. Marko Mijuskovic. You're listening to Hawaii Money Resource with financial advisor Marko Mijuskovic. If you'd like to speak to Marko, either on the air or after the show, call toll-free from Oahu and the outer islands, 877-695-2102. That's 877-695-2102.
Welcome back. You're listening to Hawaii Money Resource. My name is Marko Mijuskovic, senior partner at Wealth Strategy Partners, also certified exit planner, and you are listening Hawaii Money Resource exclusively Wednesday night. 5 p.m. to 6 p.m. Also online at HawaiiMoneyResource.com, HawaiiMoneyResource.com. So if you miss our show by any chance, just because you were doing something more important, you can go online and download the podcast. All the podcasts are pretty much up and running right after the show or shortly after the show. Today we have a topic of value drivers and business sale price. So I'm going to recap pretty much what we talk about it today. We talk about business value drivers, very important topic for all the business owners who are planning to grow the value of the business to the level where it can be sold, transferred for the right amount of money that they need to get out of it so they can live comfortably after that event happen. So don't disregard the value drivers. In reality, the value drivers is what is your business value consist of? What is it that you have that your potential buyer can acquire from you, and pretty much what will be that appealing part? So some of the appealing part that buyers are looking for in the business when they're buying the business are following. Stable and motivated management team. We talk about it. If you walk out and the business walk out with you, then there is no business to be sold. But if you walk out and the management team stays in place to run that business without you, then now you're talking. Now you're talking about the right amount of dollars you can sell your business for. Number 2, operating systems that improve cash flow sustainability. Number 3, solid diversified customer base. I give you that example from customers or clients that we are working in our office and what happened to them. It's not only your customers. Remember, this can be also your vendors or your suppliers or someone who you have agreements with. Realistic growth strategy. That's another thing. You need to have a growth strategies in place. How are you going to build this business to the next level? Remember, if you're just doing as a fly-by kind of deal and you don't have a plan in place, you might get to the same goal, but it might take 2 times longer, right? Effective financial controls. How often do you review everything when it comes to financial matters? Who does audit? Is your taxes and your business properly set up? Are you maybe paying more taxes than you're supposed to? You never know. Stable and improving cash flow. Are you doing everything to reduce the expenses and increase the cash flow? I don't know. That's why I'm here. I'm trying to stress out all this stuff that you need to worry about it. I'm here to help you out, figure out the best possible way how you can increase the value of your business and get your business to the level where you can sell it for the price you want to whoever you want and under your circumstances, and pretty much pay as little as taxes possible. So that is the key. Then after we finish talking about the value drivers and most important value drivers, then we talk about systems. What are the systems that you should have in place, right? We talk about and how the system should be designed. First of all, the system need to have a clear purpose. If there is no clear purpose and it's kind of confusing, system is not actually in existence. Number 2, system must be accountable. Who is responsible for executing each of these systems? Number 3, system must be documented. If you think you have a system as a business owner and you're keeping that in your head, guess what? Your employees, unfortunately, cannot read your mind. Okay? They cannot. Trust me. It's proven nobody can read your mind. So put it in writing, document it. You don't need to do everything this week because maybe holidays are coming, but maybe you can write one system at a time, one manual at a time. Do the small steps. Every day do something. Spend 15-20 minutes. I'm telling you, as you move through the process of doing your work and working in your business, write it down. After 6 months, you will have a system in place. Don't get burned out by just thinking about it, how massive that can potentially be. And the last thing that you should focus on is it repeatable. If you only know how to do it, if you only know how to read that manual, guess what? It's worth nothing. It's pretty much worthless. So make sure it's repeatable. The Joe that you hire for that position can actually execute it, and he doesn't need to have a rocket science degree to figure it out. Make it user friendly. Okay. So all this stuff is a good wealth of information that you should know. And I think we were pretty detailed today talking about the value drivers and the business sale price, and that's pretty much it for today's show. As you can see, music starting. You're listening Hawaii Money Resource. Today we have business exit planning edition of Hawaii Money Resource. If you miss it, don't worry. Podcast is coming. It's on the website hawaiimoneyresource.com. It's also on the business exit planning hawaii.com website. So it's pretty much everywhere. You can even find us on YouTube. If you want to, you can find us on Facebook, LinkedIn, wherever. We are all over the place, like someone said recently. But other than that, we are here every Wednesday night, 5 to 6 p.m. Hawaii Money Resource. My name is Marko Mijuskovic. Stay tuned. We'll be right back.
The Living Balance Sheet and the Living Balance Sheet logo are registered service marks of the Guardian Life Insurance Company of America, New York, New York. The graphics and text used herein are the exclusive property of Guardian and protected under U.S. and international copyright laws. Copyright 2005 to 2011. The Guardian Life Insurance Company of America. This show is for informational purposes only. Individual risk tolerance and investment objectives must be reviewed prior to making any specific recommendations. Marko Mijuskovic is a registered representative and financial advisor for Park Avenue Securities, LLC, 7 Hanover Square, New York, New York, 10004. Securities products, services, and advisory services are offered through Park Avenue Securities, a registered broker-dealer and investment advisor. 888-600-4667. Financial representative, the Guardian Life Insurance Company of America, New York, New York. Park Avenue Securities is an indirect, wholly owned subsidiary of the Guardian Life Insurance Company of America. Wealth Strategy Partners is not an affiliate or subsidiary of Park Avenue Securities or the Guardian Life Insurance Company of America. Park Avenue Securities is a member FINRA SIPC.